Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with the markets. An inflation number from the U.S. that exceeded expectations at 5% for May. Despite that, the S&P rose to a new high, even higher during the session, actually. What's the story in the global markets?
Yes, annual inflation rate in U.S. accelerated to 5% year-on-year in May, rising from 4.2% in April, and it was well above market expectation of 4.7%. Clearly, it is the highest reading since the August of 2008 due to probably quite significant base effect from last year when the COVID pandemic hit the economy hard. And pretty much right now, consumer demand is rising as the economy reopens, and obviously that affects the inflation number. However, the equity market of U.S. did quite reasonably well, particularly for NASDAQ. It was up by 0.78% and rising above 14,000 territories. And also S&P 500 ended up rising by 0.47%. Clearly, this is because even though there are quite significant inflation pressures, we saw the U.S. 10-year rate, government bond rate, declining to three-month low of 1.444%. And this is because continued liquidity existing, and also Fed is not likely to raise interest rate or doing any type of tapering anytime soon, because we need to watch the inflation number for the next few more months before we start to assume that the inflation is here to stay. Clearly, because the economy has started to recover and result of a pent-up demand, but if you look at the labor side, overall unemployment ratios as well as the labor cost increase is not supporting a very long-term high level of inflationary pressure. So this is the reason why we saw U.S. market continue to show record high level, and we do expect that kind of trend to continue as the earnings growth rate of S&P 500 and NASDAQ looks very positive.
Well, Korean stocks today higher as well. The KOSPI now above 3240. The KOSDAQ back at 990. Investors here too seem to think that even the 5% inflation number won't be enough to get the Fed to raise rates. Tell us about the local market.
Yes, if you look at the KOSPI's record high level, it was 3,266, which was hit in the January of this year, and it has been 5 months since then, and it is now very close to that record high level. However, it has not broken above that yet because there's still continued concern about the possible U.S. tapering issues resulting into Bank of Korea might be doing some rate hike sometime within this year. However, as the options and future date has passed as yesterday, we think that the fundamental is much more important factor. And if we look at the fundamentals of Korea, we are seeing record high level of export growth rate, record high level of economic recovery, and still very strong M2 growth rate of liquidity. All being said, KOSPI is expected to rise further as these options and future trading pass, and as the second quarter results comes in sometime in September, we think that fundamental matters the most, rather than the current concern about the interest rate hike. As we did analysis on what's happening to the corporate earnings, we are seeing earnings are rising faster pace than the interest rate rise, which is definitely positive for the equity market trend.
Now, another story today, the governor of the Bank of Korea, Ju-yeol, has signaled that he will eventually be pulling back on the BOK's monetary easing policy in an orderly way at the appropriate time. Until now, it had been pretty clear that the BOK would stand pat on rates, but this would indicate we're getting closer to that point. What do you make of his remarks?
Right. Obviously, government needs to say some stuff like this because we have seen continued increase in inflation numbers. As you know, the central bank has two objectives. Number one is keeping the inflation pressure check and also having orderly labor conditions happening. Now, what has Ju-yeol BOK governor have said on Fridays is that country will prepare for an orderly exit from the pandemic-era monetary easing policy if an economic recovery remains solid. If we look at the M1 growth rate of Korea, we did see that number rising to 25% plus, which is definitely a pandemic-driven type of growth. However, though, if we look at the M2 growth rate, it remains at around 11%. It is quite a high number, but nevertheless, we think that that is definitely something needed in order to support the economy. Now, also, if we look at the unemployment rate, we saw the Korea's unemployment rate rising to 3.8%, which is quite high number, rising from the previous month of 3.7% to 3.8% in May. This is still a fairly low number, but nevertheless, the trend seems to be in a rising trend. Also, we did see some of the labor participation ratio rising somewhat to about 63.7% from the 63% in the prior month. So we did see some of the unemployment numbers and labor participation ratios rising. However, though, if we look at the fundamental conditions of local retail individuals, we do have over 100% debt to GDP ratio of consumer debt. And because of this, we don't think that Bank of Korea is anytime keen about the raising interest rate aggressively. They might do it if you start to think that there is money outflow from Korea going into U.S. as U.S. start to raise interest rate. If the U.S. does not raise interest rate and that Korea remains to be very strong in terms of the economic growth rate, we don't think that the BOK is going to be aggressive in terms of raising interest rate given the debt level of individuals. Having said that, if that's the case, we think that the Korean equity market is going to be quite optimistic for the next 6 to 12 months.
Well, looking at the trade situation, we see Korea's export and import prices are rising, which is perhaps not a surprise. These figures are converted into Korean won. But from a year earlier, exports in May were up, export prices were up more than 12%, imports almost 14%. What's happening there?
Yes, it seems that the South Korea's export price rose for the 6th straight month in May amid a recovery in export. According to data from the Bank of Korea on Friday, the country's export price index in terms of local currency gained 1.5% on month in May. From a year earlier, the index jumped to 12.3%, making the largest one-year gain since the March of 2009. Meanwhile, the country's import price index rose 2.6% on month in May. From a year earlier, the index soared about 13.8%. The rise is attributed to the price increases of import products converted to local currency due to the rising prices of oil and the low materials. All having said that, we think that Korea's trade condition remains to be very positive, given the fact that global economy is on the right track and it is recovering. And Korea is very keen and strong in terms of the export areas, such as the electric cars, the semiconductors, the petrochemicals, and shipbuildings and whatnot. And if you look at most of these industries are very strong in terms of recovery. And because of this, Korean economy is doing quite well with the global economic recoveries. We think that the trade condition remains to be very positive for Korea. Also, the current account positions also will be quite positive for Korean equity market overall.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights with us today, as always, and have a great weekend.
Thank you. You too.